All right, guys. So we are live. So I just want to go over a few things of the charts now that the market is basically not moving at all. Because when we are not moving, it's very easy to sort of forget where we are within sort of the high time frame, and we start focusing overall on the tiny range and this very small range. And if you're gonna break out to the upside, or if you're going to break down to the downside. And we use sort of technicals, we're using a lot of tools sort of to guess where we're going to break away from. But in reality, this range, if you're going to break to the upside or to the downside, is not very relevant. What is relevant is to understand sort of the theme that is going on in the overall market, right? And that is sort of, I think, most people are missing. So I think as per now, I'm not on Twitter too much, but I think people are not really talking about the FOMC and the rate hikes that will go on in November and November and December. Okay, so we're having, if I'm not mistaken, let's give me a second or so. Let's find the. Give me a second. So regardless, so we're having next week we're having the FOMC on Wednesday, and then we're having the next one in the middle of December, if I'm not mistaken. And the overall theme is that we're gonna continue to rate hike. I think how much was it, with 1.2 base point, if I remember correctly, which means that we should at least get us potentially 75 base point rate hike in November next week, and then another 75% in December. So the Federal Reserve basically, or more or less, said that regardless of what's going on in the world, no matter what happens, that is the plan, and we're going to stick with it. So the market is sort of already pricing that in, okay? But except pricing that in, we will react to the data points always, okay, because liquidity gets thin. But the interesting part, it actually comes afterwards, when the market is waiting for the Federal Reserve or whatever to start pivoting, okay? So if the Federal Reserve start pivoting and ECB, the bank in the EU, etc., are starting to flip as well into getting much more hawkish, and risk assets are sitting at support, we could sort of getting a pivot, a rewind of liquidity, causing Bitcoin and whatever to start moving upwards. Now, the big difference here, which sort of is the difficult part, is really to sort of recognize that what is most likely is going to happen is that we won't get too much information before we sort of getting into the first quarter of next year. Okay, so first quarter in 2023, we sort of be either it will be pivotal in the terms of us creating a bottom, or else we will actually go much lower, depending on the outcome from the central banks, right? So this is sort of the interesting part, that doesn't really matter what you see on the chart, because, for example, now I have Bitcoin in front of us. You can see that this is a relevant level, as relevant this SR is, as relevant is this one, that one, and that. All of these are reaction levels. So if price goes to those levels, we will see a reaction. The more or less interesting part, it comes how does price move into those levels, and what are the macro picture as we are moving into those levels, right? What is the price movement? Because that is sort of suggestive how liquidity will move, all right? And this is the difficult part, where people, in my opinion, really don't take into the consideration, all right? So meaning that due to the Federal Reserve now, or we will see 1.2 rate hike, we should see the probability shifted now for further downside, regardless if you do get a squeeze or not. Okay, I don't think that is very relevant. And as easy, in a very simple terms, you can see that we're having here. Give me a second. We can use sort of this trend line. Just a sort of very simple channel that we can actually move slightly above it, okay, and stick within that level. You can see, just give me a second. If you go to Bitcoin as well, you can see on the EMA, let's go to the weekly, how the EMA is crawling. Okay, I mentioned this to the premium group yesterday as well, and for weeks now, that you can see that how this EMA is just showing average price. Average price is being kept down. Okay, algorithms use this. There's nothing more to it than this. All right, so the algorithms are using. It's just that price is being suppressed within this average price movement, right? So you can see how we're moving. So if we do flip this, okay, and we start trading above it, okay, we will start overall not only flip the EMA, but we will create a range, okay, and a bullish range with bullish price action, and this will sort of then starting to look like a reaccumulation, instead of distribution, okay, and that is, and if that happens, the amount of liquidity that will be within these levels, and short traders will start to unwind and they will pull back, right, and maybe flip and hedge and whatnot. The amount of selling that will go away from the market by itself will cause price to move aggressively higher. Okay, it doesn't even need to be more buys, just the amount of sellers that are going to withdraw from the market will cause price to come back up. Okay, understanding, very simple, extremely simple, right? But per now we're seeing average prices getting suppressed. And if you start losing these levels, right? So if you look at, if you just take this simple trend line, you can see we're trading sort of below the previous all-time high. We're trading below the 20K. We're being suppressed by the EMA, and we've got 2 rate hikes pending the next 2 months, okay, which is actually fairly aggressive. It's probably more than we have seen the past 4 or 5 months. All right, so in theory now we are sort of stepping into some very bearish environment, and I think it will take a very little effort for price to come back much lower if the Federal Reserve now start making hawkish claims, meaning that they are bullish on the dollar and sort of bearish on these risk assets. Okay, and I think that should be the main focus. Okay, so just very quickly, if we go to let's go first to just a 4-hour chart, look at this current structure. So this as well is very simple price structure, right? So you're having this sideways range. There's no liquidity at all pending the market, just waiting for the meetings next week. Potentially on this Thursday, we got some ECB rate decision, if I'm not mistaken, and you can see that there's some highs here that probably price will react to if we get to those levels, and then you're having sort of this top layer as well. Okay, so both of these levels are tradable in terms of liquidity, meaning that there will be liquidity sitting there. That's 100% sure. Now the question is, will price get there or will price go lower, right? So that is sort of the interesting part, that you can make these boxes on your chart, and it should be obvious that we have liquidity sitting at those levels, all right, and that sort of should be obvious, and we have to acknowledge that, and that there's nothing wrong with marking out those levels. Now the question is how, what kind of probability is it that we will go to these levels? Okay, for me, I think at the moment they are smaller, and if you do move into those levels, I think the reason behind that will be due to lack of liquidity, and not due to a bullish manner, meaning that there is not enough sell pressure, or they're not coming in more sell pressure at this level, so price needs to move higher, if that makes sense to people, right? So it's not that that there is more buyers, but if sellers do not want to step in here, meaning that liquidity is within these levels, it means that when price comes into this sort of highs consolidation into the empty space above or within this other structure, price gets attracted to it because there's liquidity sitting there, right? So if the order book gets empty on the sell side, just with very small buying activity, price will have to come back up and meet available orders. Okay, and that is something we have to take into our consideration. Now this is sort of the 4-hour chart. I think there is a very small chance for us getting into these levels. I think more likely we're going to go lower. Now I think it will be better to take sort of another pump in towards these in towards 20k, but we shouldn't really sort of get acceptance above 20k for the reasons I mentioned earlier, because it would sort of shift the structure on the chart, and we will sort of shift into a bullish perspective due to the EMA big figure and other topics. So I would favor further downside. Okay, if you go to the 1 hour chart and look at the current tiny range that we are working with, right? So you saw here on very low liquidity, this was zero liquidity, was nothing there. When the markets opened, there was nothing in there. Very small amount of liquidity came in, got pushed back up into this consolidation and that consolidation, okay? And that is when you got that massive rejection, and now we're sort of making here lower lows, lower highs, lower lows, lower highs, okay? And for me, even if you do go back up and grab liquidity within this structure, I still think the probability shift here that we will sort of see a move to the downside. I don't know if you're going to get that last spike up, or if you're sort of gonna sell away from current level, you know, and sort of just get back into something like this, right? So when price is ranging like this, you don't chase price. That's the worst thing you can do. You just have to sort of accept that most likely whatever kind of a dip you get, you're sort of going to get that retracement back up in order sort of to find liquidity, until there is not only a theme, but there has to be a reason behind it. Okay, and that is the point of this, I think. And the reason, I mean that there has to be sort of a driver, something fundamentally pushing price. Okay, and it can be world event, economic data point. You know, there can be a number of reasons. Doesn't really matter. But most likely, we need a driver for price to move away from that range. And you can see here on S&P 500 as well. Okay, we're just going sort of just moving or trading within sort of this channel. Okay, you can use this channel, that channel, doesn't really matter. And the point is that a channel doesn't mean anything. It just shows you a trend that the price is capped in. Okay, and the trend, of course, at the moment is currently down, and you can see that often that the buying or the price action as we're moving upwards is much more steps and elevator down. That is due to leverage taken, okay, and markets hedging. So when price sort of flips, when people are moving into risk off and hedging positions, you will always see a much greater sort of sell-off, or whatever you want to call it, okay? And that is something important that you have to recognize, that we can move very slow upwards, and then you sort of get that drive lower once sort of you get a hedge and liquidity shifts in terms, most likely, usually from macro events or whatever. And you can see that in the past, if you look at the S&P 500, you can see that all sell-off has been more extreme, and look at the tiny price action, right? So if you look at this price action, very slow, stair-stepping, right? Stairs up, all the way, right? And then you're getting sort of that elevator down. And I think for me, I'm looking at this 3K level would be very decent, whatever, right? So from 3K to 3,400, I don't really care. 3,200 as sort of the sweet spot. You know, I'm not too crazy about exact numbers. I'm more interested in sort of what happens around in the world. Right? So you're having the 50% is a. Let's check here if it's due to log scale. Let's take off log scale. Yeah, so we hit the 50, and then we're having the 60% at 3.2K, and then we're having the 70% retracement at 3K, okay, which is for me very interesting levels. And you know, if you do actually hit 3.2K, I think, you know, you can see that we're having the previous all-time high, and we're having these lows, these highs, right? I think this is a massive level. And you know, it doesn't really matter if you dip below it, right? It's not that it's a brick wall that we have to respond to, right? It doesn't really matter. Even if you do get sort of a capitulation event, that we actually go straight through it, as we're getting that buyback, it will sort of be a pivot where price ugly squiggle. But you get the point, right? um, even if you do get an expansion below that, the way we reclaim or whatever price does, once you're getting that bullish price action after that drive lower, that is when you're getting that high confident and that you really believe or understand that you're going to sort of see a pivot in the market again. You can start going much more aggressive, and I think that is trading with high conviction and finding trades with high conviction is very important for a trader, okay? Because there will be times where you take trades with low conviction, and there will be times you take trades with high conviction, and when you get that, I think sort of those are the important moments, as trading or investing or whatever. So let's take a quick look here. We can quick look at Ethereum as well. Was looking much better than Bitcoin. You're seeing the same sort of shape here that is created. The sideways price action, for me, it just symbolizes that there is no liquidity at all in the markets. And I really hope that sort of the higher we get before sort of getting lower, the better it is, and sort of thinking that, okay, so what has happened the past few months is that we are reacting to CPI data points and FOMC data points, and we often just chop and don't do anything outside that time frame, right? So before or after these events, we don't really move at all. So for me, that is important to note, because when we go into the FOMC, I want to be in a position, right? Because that is sort of that is when I'm willing to put a few R's on the line, right? So there's no point sort of trading too much right before those data points when you know that the day you're going to move will be sort of into or during those data points, okay? And that is something you should really take into your consideration, okay? Meaning that as we go into the FOMC, I want to get into holding sort of a decent position, right? And hold and stay sort of or hold my shorts, okay? Or sort of entering short. So let's just last live we had as well, we were discussing some of these altcoins, and we are moving in those exact levels, right? Because we had that initial dry up into the first level of liquidity. This one, right? In particular. Let me give me a second there. So driving to this area of liquidity, responded, price is sitting at the low. This is sort of the lows there. So you need sort of a drive. Once you get that driver to push price lower, that is when you sort of it's going to get ugly. So if you look at price here, you can see that from current levels, okay, just to the next area of support, okay, which on the chart now look insignificant, but in terms of percent, that would be another 55% drop, okay? And on the chart, you will see that, look at this, right? Because this is important. When you don't look at the log scale, you will see that from this current price to that price is 50%, right? And give me a second. So from the high, you get the point, right? So from the high, 50% looking at the highs, because this is not a log scale, it looks much more extreme, right? Much more extreme. Then this tiny drop right there will be another 55 drop, right? So price is already down. It's already down 93% into that level, okay? And from 90, we're already down 93%, and you can easily get another 55, even another 90%, okay? That is sort of what you learn from bear markets, is that when price goes down 90%, you think I can buy now because how much lower can we go? You can go another 90%. It's just that when price reverses, it goes much more faster. That is the big difference, okay? So the higher price goes, the more difficult, the larger or the further we need to go to multiply, right? So if you're sitting at the $3, for it to multiply, it's extremely difficult, while for it to multiply, when you're 0.05, it's much, much easier, okay? So let's go to another example. So we're having AVAX as well. You can see how we're just sitting at the support. I think if you drop below This area is going to. Okay, so let's go back. Sorry, let's go back and talk about when is a good time to buy. I don't want to buy FTM. I'm gonna say if is there any coins I would like to buy, but in terms of levels, if you do get a price move lower and you get another 55 drop lower, I think between these two levels it could be a good buying opportunity if you're interested in this asset. Okay, so let's just check here. So these levels will be a good buying opportunity. Okay, and that would take us another, if you do another, right, you look at this, right, so you do another 80% drop from 50% to 80% drop from current level, that will probably be a good buying opportunity. The same goes here for AVAX. As soon as it drops actually and hit this high time frame support, is probably going to be a decent buying opportunity. So if you can say this whole level, right. So let's go away from the log scale. So if you do another 30% to another 70% drop, right, from current levels, we're most likely going to create a bottom. If you do flip EMA and this turns into reaccumulation, of course, that would be a good buy as well. Very simple. Price action near as well. You can see how we're moving into the lower spectrum. So if you go in towards these lows right there at 1.5 towards the $1 mark, that would be an extreme good buying opportunity, right? So you can say sort of this will be sort of the level you will be watching. Okay, so that means that you're just getting prices just going back to the bottom right there. So what else can take a look at? Axe as well, looking extremely bad. As we have been discussing, I think to be interested in Axe, if you do go to some of these historical lows, I think these two levels, if we get to these extreme levels, that will be a very good buying opportunity. So that will be from $5 and lower. Okay, so between 1 and 5 will be great levels to buy something, right? So if you do get sort of a retest towards all-time high, that will be sort of a massive trade. So yeah, I think that's about it. The same goes for Solana as well. You can see sort of getting that head and shoulders going on. So I think it's something we can take away, right? And if you do get sell-off below, let's get here. Below this level, that would be great as well, right? So if you get a sell-off below $20, so between 10 and 20 is probably going to be extremely good buy for Solana. Okay, very simple. Let's go to the log scale. So anything, right? So as soon as we break below the lows there around 20K, whatever price does, right? So the whole spectrum between, I know this is too much for you maybe to comprehend, but sometimes it doesn't really matter, right? Because this is sort of when you get into that dollar cost average range, because the levels are sort of insignificant, because we are looking at this in sort of not larger but longer time frame perspective, right? This will not just be simple trading, right? It will be sort of let me give me a second, based on what we expect to happen in the future, right? So meaning that if you do get let's say you get sort of a movement towards $10 or $5 on Solana, for it to go back up and retest, let's just say assume $10, for it to go back and retest sort of the first high there, that will be 1,400%, right? Will be sort of a 14x, 15x, and if you go back to all-time high, right, that will be really great trade. So that is sort of the high time frame bets you should be willing to take, if you want to be in this space. So if any else, no, I think I covered the most that I'm interested in. You're having Binance coin as well that we haven't retraced or filled in this void. I really doubt that Binance will do it. Anyhow, if whatever Binance does, below sort of the 200 mark, it will be good levels to dollar cost average in. Okay, so let's mention just Bitcoin as well. Whatever price does below 70K, will be good levels to dollar cost average into, right? So sort of being the sweet spot around 12K. I think, if you do get to 12K and get a capitulation event towards 12K, that will be sort of an amazing trade, right? That's sort of the trade you want to be a part of. So on a weekly basis, the same goes for Ethereum, right? So it doesn't look too bad here at the more high time frame, but I don't want to think too much of what we're going to happen within this range. But as we mentioned, anything below here, if you do starting to range lower and sort of getting a channel into some of these lower levels, right, that would be sort of extremely interesting in my opinion. Up in retest, maybe we get these levels will be interesting. So I mentioned that before. So I think the 600 level on Ethereum will be sort of really good, right? So if you do get a sell-off towards between 400 and 600, I think that would be sort of the sweet spot. If you do get to those levels, that would be sort of the perfect trade, right? But the probability of that is always also slightly lower. It will come down to S&P 500 and Bitcoin. Okay, so I think I covered most of the charts. It's not too much to mention. Just keep your focus on next week and see how overall price action unfolds. We still haven't seen a good capitulation. So we did have that prior capitulation happening, but I think we should see another a bit more or slightly more extreme, or else we will slowly start to bottoming up, right? So usually, if you use Bitcoin as an example here, if this will be the bottom, you will most likely see very dead price action unfolding for a while, right, before sort of the breakup. And so if this turns out to be the bottom, you would see sort of very dead price action, moving around. Okay, and then suddenly you will get sort of that larger breakout. And that is usually how price action unfolds, because we need sort of that very low liquidity state to get that expansion, because there's a lot of liquidity loading during those times, or very not a lot of liquidity at all loading at those times. And once you're sort of getting that driver to push price, you're getting those extreme price movements. But I would really like to see actually another capitulation event, right? Because that would give much more confidence in the trade, meaning that or you would be then more confident in chasing longs instead of being on that defensive side. Because if you do not get lower, I will be on the defensive side instead of being aggressive. Right? So if you do get another capitulation event, it's much easier to be aggressive and chasing longs instead of chasing shorts. All right. So I think that's about it for this particular video. I hope you got something out of it. Let's talk later, guys. Peace out.